Guys, so in today's video, I wanted to talk to you all about the different Forex trading sessions and how to navigate them correctly. Now, if you were to go onto the internet and type in Forex trading sessions, you'll be greeted with this sort of schematic, which then you can interpret to your own time zone. But the main things that you have to really see and understand is that we have a London session, a New York session, a Sydney session, which is just the lull between New York and Tokyo, and then we have the Asia session or the Tokyo session that happens overnight. Now, for me being in the UK, I mostly trade the London session, which is the opening in the morning, and this is where I utilize the Judas swing trading strategy. Then we have the New York session, which is the afternoon, and then we have the Tokyo session overnight, and I don't really do anything during Sydney. Now, these are the main four trading sessions that everyone is going to be aware of. However, there are two other specific times throughout the day that we have to really keep in mind, and these two are very key because if you don't understand them and you don't know when they are, then it can majorly affect your trading. Now, the first one is understanding spread hour. Well, spread hour is a specific hour of the day where brokers are going to increase their spread and in turn making your trades potentially hit stop losses before they are meant to. Now, as we can see right here in this example that I have on the screen, this is a perfect example of spread hour. Now, this is where the hour kicked in and we had all of this volatility come into the market and price was manipulated to hit us out at break even. And then price did continue on its merry way anyway. Now, this is a specific time of day. It is only an hour. And for us here in the UK, it is at 10 o'clock at night. However, with the recent daylight changing that has happened, it is currently at 9 o'clock at night for us in the UK. So when this spread hour kicks in, you have to really make sure that your stops have adjusted to the increased spread that your broker is going to be offering, because if you haven't adjusted, that could be detrimental to your trading. Now, this is something that we have to learn and understand when we come into our trading day and account for this with any open positions that we have. And the reason why I'm specifically talking about this right here is because I will go into this in further detail in just a few minutes. But apart from spread hour, we also have the New York Stock Exchange open, which affects a lot of the indices. So if we go over to one of the indices, what we can see is that every day at 2:30 in the afternoon, well, it's 2:30 when the daylight changing is normal, and then it is 1:30 at the moment because we are 1 hour back. So as we can see right here at exactly 1:30, we have all of this manipulation come into the market and we have a big influx which pushes price in one direction. So the New York Stock Exchange is something that we have to keep in mind because that is a very volatile period of time during our trading session that can affect our trades. And then the other thing that we have to keep in mind, as I said, is spread hour. So if we go back to this trade that was in question, and we can talk about this in detail. Now, why am I talking about this trade? Because this is actually one of the trades that I sent out to the VIP group just the other day. And as we can see, I sent out this EU buy limit. Now, as you can see, we were going a break even and we were doing aggressive trade management because it was later on in the day. It was during the lull between New York and Tokyo. So it was out of our trading session. However, I really liked the setup and the trade. So we took it. And as we can see right here, we were moving our stops in profit. And in my head, what I was thinking is we were still going to have spread hour at 10 o'clock. I didn't account for the fact that the New York time has just gone back an hour due to daylight saving. And because of this, I didn't realize that it was now going to be 9 o'clock for us over here in the UK. So that was completely bad on my part. However, let's jump straight into the analysis behind this trade so that we can understand why I took this trade and also why spread hour affected us when it did. So what can we first of all see when we come onto the charts? Now, the first thing that we see when we come onto the charts is that we have this nice sort of bullish price action. So as we can see, price has given us this higher high, higher low, higher high, and now we are chopping around inside of this trading range. Now, as we understand, the higher time frame is bullish, and this means that we are now actively looking for buying opportunities. So once we've understood that we are bullish, our next step is to identify our higher time frame area of interest that we are going to wait for price to get into before we start looking for an entry. So what can we identify in this leg of price? Well, first of all, if we go up to the hourly, we can see that I've identified this hourly demand zone all the way down here. However, as we cycle down through all of the time zones on the 30-minute, we can see right here that we've got this nice inside bar that was a pause in the market. And along with that, we've also got this nice bit of liquidity left by this massive wick right here too. That means this is giving me enough scope that price is going to want to take this liquidity out, push into this zone, and give us some sort of reaction out, potentially to this is sort of bearish supply zone before we see lower prices. So that was my theory behind this trade, and I waited the entire day for price to actually come down, take out all of these liquidities that are standing right there, take them all out, and give us a push down into this zone, which is why this trade was a little bit later in the day. However, that just sums up exactly how we identified this area right here, and that's why we were looking for entries when price got down here. So now that we've identified our higher time frame area of interest, our next step is to simply just wait for price to actually come down and enter into this zone. So if I play price on, what can we now see? Well, first of all, price has tapped into this higher time frame area of interest. So now what we're going to do is we're going to wait for one of our entry schematics to play out. Now, the reason why we use entry schematics is because it shows us that price is actually willing to change its direction to go in the way that you're anticipating it will go. So that just gives you more confidence that this trade is actually going to play out the way you think that it will. So if I continue to play price on, what we can see is that this is not a valid market structure shift. Now, why is that? Well, first of all, we have to understand market structure. We've got a lower low, lower high, lower low. Therefore, this is now our trading range. So because this is our trading range like this, anything that happens in between is just substructure. Therefore, we're not worried about what's going on because it hasn't broken anything significant for us to be interested. So if I play price on, what can we see? Now, this has now just induced all of these smart money buyers into the market because what they're thinking is, wow, look at this beautiful demand zone, this order block that I've got right here. I can then just take an entry, taking me higher. So what are they going to do? They're going to place their stop entry at the open of this order block right here, just like this. They're going to put their stops just below the low, and then they're going to target wherever it is they're going. And if we play price on, what that shows us is that the market is now inducing the buyers in that have not understood market structure. And if we go down to the 1 minute, that will be even more relevant. So as we can see, we've had this breaker structure right here, which is now inducing all of the buyers into the market. So we've broken structure, prices come down to the extreme zone, tapped off, and then gave us this secondary break of structure on the 1 minute, solidifying to the smart money traders that we have now switched directions and we are bullish. Therefore, they're getting in for their re-entries and stacking positions right here. However, on the 5 minute, what can we see? There was no valid market structure shift. So what are we anticipating is going to happen? All of these smart money traders are now going to get liquidated. Boom. There it is. So now that everyone has been liquidated, price has taken this liquidity, taken everyone's stop losses, and is going to continue pushing down. So that just shows us that we have to really understand where we are in line with our market structure. And if we don't, then we are going to in turn end up becoming liquidity. So now what is our trading range? Well, this is our high that broke the low. Therefore, this would be our high. And now this is the low that was broken. Therefore, this is now our trading range. So if we break above this high right here, then we know that we can safely enter this trade because the market structure shift has happened. So as we can see, we get this super nice reaction after taking this liquidity. We get this bullish push out, which is giving us more reason to believe that this is very valid. As we can see, nice bullish push straight out of here. Now, once I saw that, I was very, very, very interested. So then I identified my fair value gap for me to be able to take an entry. And after this, once I had all of this marked out. All I had to do was place my entry at the open of that fair value gap, stops just below the low, and then we were targeting this higher time frame area up here for a nice 1, 2, 3. So this was the trade, nice and simple. We understood exactly where we were in line with structure. And if I play price on, we can see that price comes down, builds this liquidity first. And as we can see, again, this is another way of inducing buyers into the market. It's got this trendline liquidity that was being built. And once we had this trendline being built, trendline gets swept. Price pushes down straight into our fair value gap, giving us this beautiful entry, taking this liquidity as inducement. And from there, we're just shooting away. So that was super, super nice. However, this is where the complications started to happen. So in my head, again, I was with the understanding that spread hour is going to come at 10 o'clock. So if I put my vertical line on the chart, my anticipation was that spread hour will be here. So I thought by then we'll be breaking this high. Therefore, we can move our stops just a little bit higher, but we won't move them into profit because then that way we don't get taken out by spread hour. However, in the meantime, because we were out of our trading session and we was in the lull between New York and Asia, I thought, you know what, just to be safe, let's go break even and let's also start trailing our stops because that way it makes sure that we are safe. So right here is when I said to move our stops into profit. So I believe we put our stops just below this low. So we're here with our stops in profit. Now, my anticipation was that by the time we get to around 9:30, we were going to remove all of our stops that were in place because I knew that spread hour was just around the corner. Little did I know, spread hour was actually at 9 o'clock right here. So this is something that I missed because I didn't keep up with the New York daylight saving because, of course, I'm in the UK. However, it's still my fault. I should have been in line with understanding where we are regardless of my own time zone. So if I play price on, as we can see, as soon as we get to 9 o'clock, bang. This was the manipulation done by the brokers. And this is why spread hour is so deadly because not only did they take us out right here by increasing the spreads and manipulating the charts, but after that, price decides to continue on its merry way and go all the way to our take profit. So if I play price on, what we can see is that price does eventually go straight to our take profit. Now that is really annoying because we were taken out by spread hour. And that is something that I knew was coming. However, I just didn't realize that because of daylight saving. So it just goes to show that you have to really understand your trading times, your sessions, and also all of these little different bits that are going to affect you throughout the day, such as spread hour and also the daylight saving. Because at the end of this month, on the 31st of March, our clocks also go forward. So that way, what will happen is we will then go back to equilibrium and there won't be any of these issues. Our spread hour will go back to being at 10 o'clock, which is what I know it to be as. And that just stops any sort of confusion. But in this little layover that we have, the 2-3 weeks where the New York clocks have gone forward, ours haven't, or well, they've gone back, ours haven't. So because of this, we are now stuck in this little lull that we have going on. However, it will all come back to equilibrium at the end of this month. So I hope you guys learned something new from this video. And if you did, don't forget to leave a like, comment, and subscribe. And if you did enjoy the video, don't forget to go down in the description, click the link to join the Discord, and come and let me know what you enjoyed and what you learned. But on that note, guys, I hope you all had a great trading week, and I will see you guys in the next video.